Morning, Steve here in Chicago with the morning grain comments. Yesterday was a pretty quiet day in the grain markets. We did see some selling come in, turnaround type Tuesday after the recent rally. Overnight prices are unchanged to maybe a little bit lower, led by the wheat market. You've got the dollar higher, crude lower, and U.S. stocks are opening up a little bit lower after yesterday's big gains. As far as today's numbers are concerned, energy day with crude oil stocks being reported, ethanol production, ethanol stocks, ethanol margins being reported. So we'll see if there's any build in both stocks and if that offers any resistance to prices. We also note that in looking at a chart, the corn market is at the upper end of the trading range that it's had for most of this year after the tariffs were announced. So most of that, I think, is due to the solid demand and the fact that the market didn't see really anything from the USDA earlier this month to push it lower. We're not seeing a lot of farmers selling, and so we think that there's a chance we could push over this 380 level in December corn. Two things that might offer resistance there. Number one is the farmer could begin to sell cash at those price levels. Number two is that he's expected to increase acres next year, and normal global crops should offer resistance to prices. As far as beans are concerned, they continue to be in a very broad trading range. November beans between $8.20 and $9. We're again at the upper end of that range. Continue to see people write about the possibility of U.S. and China coming to a resolution on their trade issues. We're not seeing that. We're also hearing about losses in U.S. soybean crop due to these heavy rains. Even if we do see some losses, we still have a big carryout, and South American crops are off to a very good start. And China is still not buying U.S. beans. So the bean market probably is at the upper end of a trading range, and we'll see if the funds want to keep buying and trying to push stops that are above the market despite the bearish fundamentals. The wheat market is at the lower end of the trading range. Again, we're not seeing any export demand coming out of buyers. It's fairly quiet around the world. The Russians continue to offer some wheat, but their quality issues are raising concerns about future exports. And the wheat market just needs a shot in the arm to try to get some new demand here to push prices back at the higher end of the trading range. It'll be difficult for us to trade much higher over the recent resistance due to the fact that if we have normal crops next year, including higher U.S. acres, it's going to be hard to rally the wheat market. As I said, funds sold beans, meal, oil, corn, and wheat yesterday. Continue short about 25,000 beans, long 40,000 meal, just long a small amount of corn, and short a small amount of wheat. So again, they're basically even going into the rest of the harvest, going into the Thursday export sales report, and going into the end of the year. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.